It's John observation here. What we just witnessed is not normal market behavior. This was a violent historic reversal, and if you're only looking at the surface, you're missing what really happened. Gold is now up more than 11% from the bottom, back above the 4,880, 4,900 level, adding over $3 trillion in market value in just 30 hours. Silver is up nearly 20% from its lows, back above 88, adding roughly $800 billion in the same time window. Let that sink in. Almost $4 trillion recovered in just over a single day. That's about 35% of the entire $11 trillion wipeout we just experienced. And here's the part most people still don't understand. This happened while retail investors were panic selling at the bottom. This is exactly what forced liquidation looks like on the way down, and this is exactly what a short squeeze looks like on the way back up. Volatility is not the problem. Volatility is the opportunity. Gold violently shook out weak hands from all-time highs, and silver followed with an even more brutal move. And now, just as fast, both metals have snapped back, reclaiming key levels. In less than 2 days, precious metals added over $4 trillion in market capitalization. That does not happen because of retail traders. That happens because of institutions, sovereign wealth funds, and central banks stepping in with size. I want you to understand something very clearly. I posted on X hours before this reversal about the consequences this channel and its viewers would face after I released the JP Morgan crash video. After you read that post and watch that video again, you'll realize something uncomfortable. I was first, and since then, my viewers have been unsubscribed repeatedly. At the same time, channels that copy my titles, thumbnails, and analysis have exploded in growth. Every single time my team posts a video, within hours, copycat channels appear, cloning the messaging, repackaging the analysis, and pushing hype. They do it because they know OG is the source code. Without my work, hundreds of these channels disappear overnight. But Team OG remains right here, at the top, doing what we've always done, guiding our people with unbiased, researched, and direct analysis. We are confident in precious metals, but we are not blind. We understand how manipulated these markets are. We understand how hard institutions fight to prevent the system from showing visible cracks. This channel was never built for hype. If you want hype, go watch someone else repackage my content. This channel exists for education and unfiltered truth, and we will not back down, no matter the consequences. Let me be crystal clear. My team has never asked you for money and never will. Anyone pretending otherwise is a scammer. Our only official handle on YouTube and X is OG John AG. No exceptions. Now let's talk about why this $4 trillion reversal matters so much. In a single day, another 2.8% of silver left the vaults. The drain is accelerating. At the same time, China just revealed its endgame. An article published on the official website of China's central government, authored under Xi Jinping's leadership, outlines what they call building a financial power. The English version is watered down. The Chinese version tells the real story. 6 core tasks are outlined, and at the very top of the list is currency strength. And the prerequisite for a strong currency is explicit. Control gold pricing power. Become the world's top producer, consumer, and importer of gold. Hold the largest gold reserves on Earth. This article wasn't random. It was published in Shuxi, and it aligns with the symbolism of China's September 3rd military parade, but this time in the financial arena. The message is clear. China is nearly done preparing. Their massive gold reserves will be used to support the internationalization of the renminbi. The global gold final battle is approaching. Gold defines the value of all national currencies. Gold defines the next international monetary order. And China is positioning itself as one of the dominant players in that battle. This is not speculation. This is official Chinese government policy. Gold pricing power equals currency power. Whoever controls gold controls the system. And the data confirms China is executing this strategy quietly and relentlessly. China is buying roughly 10 times more gold than it officially reports. In November alone, China purchased around 10 tons of gold while reporting less than 1 ton. In September, the central bank acquired 15 tons, again about 10 times more than officially disclosed. They are accumulating in silence, releasing minimal numbers to avoid spiking prices prematurely. The real reserves are far larger than anyone publicly admits. Look at the price divergence. Western spot silver trades around 88. Shanghai spot trades significantly higher. Shanghai futures bounced aggressively from the mid-90s into triple digits. Even after a 40% crash and a 20% bounce, premiums remain elevated. Physical metal continues to trade above paper prices. That tells you everything you need to know. The paper market is a leveraged illusion. The real price is what it costs to get metal into your hands. While paper traders were forced to liquidate, physical buyers stepped in. In Singapore, people lined up at United Overseas Bank, the only bank there offering physical gold, even as prices were falling. Retail investors were buying the dip because they understand the long-term drivers haven't changed, since the low gold is already up roughly $500. Meanwhile, paper market activity went completely insane. SLV, the largest silver-backed ETF, saw $41 billion in trading volume in a single day, more than any stock on Earth. That is not retail behavior, that is institutional warfare. Despite all the attempts to slam silver lower, all the banks managed to do was shave a few thousand contracts off open interest. Context matters. In 2011, during the Reddit-driven silver squeeze attempt, open interest exceeded 250,000 contracts. Today's action is not retail-driven. Retail sold the bottom. Institutions bought it. The $4 trillion reversal proves it. There is an escalating war between the US and China over scarce and critical silver. And short sellers are fighting a losing battle. The US government is now openly launching a gold and silver stockpile. A $12 billion critical minerals initiative has been unveiled to counter China's dominance. This isn't subtle anymore. Governments are telling you to own real assets before currencies devalue further. Dealers are running out of metal. Vaults are draining. One major bullion dealer is down to a single 1,000-ounce silver bar available for pre-sale. Industrial buyers are circling. This is what a real physical squeeze looks like. The banks tried margin hikes, they tried price suppression, and yet metals keep ripping higher. The system is under stress. Now, let's talk about the risks, because there are real ones. Japan's 30-year bond yield just hit the highest level since these bonds were created. Japan has the worst debt crisis of any major nation on Earth, with a debt-to-GDP ratio around 250%. For decades, Japanese investors ran the carry trade, borrowing at zero and investing in U.S. Treasuries. That trade is now dead. Japanese bonds yield nearly as much as U.S. bonds, without currency risk. Capital is coming home. That means trillions in potential selling pressure on U.S. Treasuries. When yields spike, everything else breaks. The S&P has already shed trillions in value. The U.S. Treasury is literally calling Japan, begging for stability. The Fed is intervening to support the yen. This is systemic stress. This is why metals initially sold off. Forced liquidation. But once that selling stopped, the underlying physical bid reasserted itself. And here's the bullish case. The stock market is entering its final bubble phase. Concentration is at record levels. When this breaks, capital flows into real assets, gold, silver, and strategic commodities. Metals are not done. Can gold retake 5,000? Can silver challenge 100 again? The momentum is shifting fast. China is preparing to reveal its true gold reserves. If those numbers come out at 10 or 20 times what's officially reported, the gold market reprices instantly. Central banks scramble. The final battle begins. 4 trillion recovered in 30 hours wasn't noise. It was a warning shot. So, where does this leave us? Forced liquidation, flushed paper hands. Physical demand never left. Vaults are draining. China is accumulating. Governments are stockpiling. Banks are trapped. The paper market creates volatility. The physical market creates the floor. Know which game you're playing. Use logic, not hype. Think independently. And understand this: most people still have absolutely no idea what's coming.